Hey, what's up, traders? So we had a pretty good day today. Traded live with the team. It was Thursday. Called out 3 trades during the live trading. We took a win on SPY, we took a win on Apple, and we took a loss on Amazon. Pretty decent day for myself. I'm up a little over $1,000, but the winning trades are not the ones that I want to review today. I feel like I've made plenty of videos covering winning trades. So I want to talk about the losing trade that I took. That was a decent setup, but probably should not have been taken. I got a little complacent on the trade itself, on the trade idea, on the rules, and it cost me, right? So let's break it down. We're going to go over to the day trade watch list channel and look at where we have Amazon as a long idea, above $133. My reasoning for adding this to the watch list for today was that it was trading inside of a gap on the daily time frame, had room to run up to $135 to fill the top side of that gap. So we're on the 1 minute time frame for Amazon here, and we're going to draw a trend line at $133. So this is our trigger level. Market opens, stock runs up to 133, and then starts to consolidate. And we get about 1, 2, 3, 4, 5-ish minutes of consolidation here, just under $133. Now at this time, if I go to SPY, at this time, the opening move on SPY was a drop and then consolidation at the previous day's closing price. So looking at this, I'm thinking, okay, Amazon right off the bat showing relative strength, meaning it's moving up while SPY is coming down. SPY is holding support at the previous day's closing price after dropping in the pre-market session. So I'm thinking if SPY holds support here and bounces, maybe there's a chance that Amazon, which is already pushing, maybe there's a chance that Amazon breaks the resistance at the $133 trigger level and presses higher, pushes up into the high of day. So my thought process for the entry here was that if the stock is consolidating already underneath the trigger level, that when it breaks the trigger level, it may not pull back because it already has consolidated. So I would think, that we would get a breakout move. We would get some momentum come into the name and press and push it up higher. So keeping that in mind, I decided on this particular trade that I was not going to wait for a break and then wait for the pullback retest because I didn't think that we would get one. And then I was going to go long on this on a market buy when the stock broke high of day. And I did just that right here. Literally at the time, the high of day on this stock. I don't know if it was a FOMO entry or if it was just something where I got a little complacent or got a little too greedy, maybe trying to force a trade here. Or maybe just giving too much focus to the 1 minute time frame. Generally I'm waiting on the 5-minute time frame for these stocks to break the trigger level, for them to close, for the 5-minute candles to close above the trigger level, and then the pullback retest like we see over here, right? The close above, the pullback retest, and then the run. I just decided that on this trade, I wasn't going to do that, right? And so market buying after the high of day pop or into the strength of the high of day pop caused me to get a higher entry, the highest entry almost of the day at that time that you could possibly get, and then the drop down back below the 133 trigger level. So I was immediately red on this position. I wasn't green, not once on this trade, immediately red. I had a chance here, I think, to close out for break even, but I thought, hey, it's still holding. It might go. And then the stock rejects 133 totally. So on this rejection, I was holding through. I was thinking maybe this little bit of resistance here might hold as support and we get the bounce move back up and then, maybe a retest. Maybe this is a fake breakdown or something. It wasn't. It was real. So the rejection of 133 and then this move lower, and I wound up closing the position closer to halfway through this candle. So I would say mistake number one here is that I did not wait for confirmation, right? And I'm usually so good about doing that, but I did not wait for confirmation here. So that would be mistake number one. Mistake number two, well, I know better than to go long on green candles because at one point this was a green candle, right? Usually it's wait for confirmation, don't go long on the green candle, and then go long on the pullback entry. So that would be mistake number two, is just taking the entry long on a green candle. And then mistake number three, I think here, would be, if I got the rejection on this candle, realistically, I should have closed it there. I don't think that there was necessarily a need for me to wait for this to drop further. Maybe I was just giving it too much room. I had a chance to get out at break even on this trade. I had a chance to get out at a 10% loss, 15% loss. By the time it got down to, where I closed it at, it was a 30% loss. Now, where I did execute this trade well was with my risk management, because I wasn't in with a lot of capital. So from a monetary standpoint, it wasn't, the end of the world. It's not the biggest loss that I've ever taken. But from a percentage standpoint, still a 30% loss on a trade that, really I had no business being in. So I wanted to review the losing trade here just as a reminder, maybe for myself even, that, the rules exist for a reason. And the moment that you get complacent and you stop following your trading plan and stop following the rules, or start trying to force something that really isn't there, the market will humble you, right? The moment that you get complacent, the market will humble you. And this serves as a stark reminder of that. Hey, follow the rules. There's really, because had I just stayed patient here and not taken the entry long, and then we see the rejection, maybe I go short right here. Maybe I market buy short on the rejection for this rundown, right? So the trade cost me, and I know it dropped lower and then consolidated and ran right back up. There's no way of knowing that it was going to run all the way back up. And had I held even longer, I probably would have been down 50, 60, 70%, who knows, on a trade that we didn't know was going to reverse like this back into the high of day. So losing trade on Amazon long above 133, giving too much focus here to the 1 minute time frame, and going long on a green candle that did not have confirmation, cost me a 30% loss on Amazon. All right, that's it. That's all that I wanted to review, letting you know that, hey, I'm human too, right? I'm not perfect. I don't win all the time. Thank you so much for watching the video and spending your time here with me. Press the like button for me if you haven't done so already. It's the best way to support this type of work that I do. And if you haven't subscribed to the YouTube channel, I recommend doing it. I break down trades pretty often, and I don't really know too many other traders out there that are giving you as much information as I am. I haven't seen too many YouTubers breaking down trades quite like this. So if you enjoy the content, show some love. I really appreciate it. Again, thank you so much for watching. Thank you for your support, and I will see you in chat. Take care. Cheers.